Hi, my name's Joe Achituro. I'm a certified public accountant, and I'm going to teach you everything you need to know about doing your own taxes. So let's get started. All right, let's get started with our filing status. How are we going to file? Are we singled, married, filing jointly, head of household? Let's check it out. Let's see what the rules are going to be. There are 5 different filing statuses. Let's check them out. Single, head of household, married filing jointly, married filing separately, qualifying widow, widower with dependent child. So let's check that out. Single, what does it mean to be single? You're unmarried, you're divorced, you're legally separated or widowed as of December 31st. Now there's going to be some special rules we're going to go over later, but generally that's the rule. Okay? You're also single if you have a child with another person and the other person is going to claim the child as their dependent. If that other person's going to claim the child as their dependent, then they are going to be head of household and you are going to be single for that particular year. Right? So next year, if the child is going to be my dependent, then I'm going to claim head of household and the other person is going to be claiming single. I have a whole video on dependents and who can claim who as a dependent and what are the rules for that. So please look for that video to help clarify that. Special rules. You may be considered unmarried even though technically you are married. So let's see what that means. If you file a separate return, these are the criteria. You have to meet all 4. If you file a separate return, which means married filing single, separate, single, or head of household. 2, you paid more than half the costs of keeping up your home. And that means just the home expenses, right? Mortgage or rent, utilities, insurance, and food that you buy for consumption inside the home, as well as taxes. Your spouse didn't live with you for the last 6 months of the year. So this is a case in which you're still married, but your spouse has moved out of the house. Now, this isn't like your spouse is living abroad while they're at work. This is you guys are separated. You're getting divorced. They haven't lived with you for the last 6 months of the tax year. That's what that means. The 4th thing is your home was the main home of your qualifying child. So what we're really looking at is you're going to be claiming head of household, typically in this situation. And as head of household, you have to meet all 4 of these criteria or all 3 of the other criteria. And then you can still file head of household even though you're technically not divorced. And if you do that, the other spouse is going to be filing single. All right? So let's move on. That's going to be your best option, right? Generally. That's why I said that. Most married filing singles, we're going to go over that rule later, but most married filing separately, not single. Most married filing separately are going to result in higher tax burdens in 99% of the cases because there's a bunch of things that are going to be excluded. If that's the case, you're not really going to be using married filing separately. Another special rule. If you have a non-resident alien spouse, what does that mean? It's basic, right? I'm married to someone who, let's say my wife is a non-resident alien, which means let's call her French. And then there's some special rules for that, right? She was born in France. If your spouse was a non-resident alien at any time during the tax year and you haven't chosen to treat your spouse as a resident alien, right? I don't know why you wouldn't do that, but let's assume you didn't do that. Then you are considered unmarried for head of household purposes. Your spouse isn't a qualifying person for head of household purposes. Right? In order to qualify for head of household purposes, if you haven't claimed that your spouse is a resident alien, then you must have another person who meets the requirements to file as head of household, like a child or a relative living with you. Again, let's move on. So let's go over the head of household rules. You have to be single, right? As of December 31st or legally separated, or that extra qualifying rule that we just went over. You need a qualifying dependent child or relative. So if you have a relative who's a dependent, now I did a whole video on dependents. Go watch that if you don't know what they are. Next, must pay more than half of the upkeep of the home. Again, I listed out rent, mortgage, interest, real estate taxes, insurance, repairs, utilities, and food eaten in the home. Right? This is generally going to be used by single parents. The reason you're going to use head of household over single is because you're going to get a larger standard deduction. In addition, if you're single, you can't get child tax credits. Right? So you're going to need to file as head of household. Married filing jointly. So when you're married, you're typically 99% of the time going to file jointly. That means you're going to put your name and your spouse's name on the same exact tax return. You're married if you were married as of December 31st. Again, we're going to follow state rules and state law. So it can be a gay marriage, it can be a straight marriage, it doesn't matter. If state law declares you married, then you're married as of December 31st and you're filing married on your tax return. It's most common because it usually provides, again, 99% of the time provides the lowest tax burden. I think we already went over this. This is a new one. If your spouse dies during the tax year, you may still file jointly for that tax year. Right? You're married again, and this is for people who don't have children. So let's move on. Married filing separately. You can do the calculation. Most of the time, it's going to be a complete waste of your time. All right, you'd have to be married as of December 31st. Again, it's not common. 99% of the time, you're going to pay higher taxes by filing separate. Right? Again, you got to follow state law to determine if you're married. And this is an extra rule, if one spouse itemizes deductions, then the other must also itemize deductions as well. Right? One can't itemize and then the other take a standard deduction. What you also need to know, I didn't put this on here. If one spouse itemizes deductions and the other spouse has at least $5 of income, the other spouse must also file a tax return. Right? Filing separately is also going to put all sorts of limits on what you can deduct and what your tax credits are going to be. I'm going to go over those in the next slide. What are the limitations of filing separately, and why don't we really want to do this too often? These are the things you're pretty much going to give up. Right? No student loan interest deductions. No education tax credits are allowed. Child tax credits are going to be limited to half of what they normally are. Earned income credits, gone. You don't get any adoption credits, and any money included that you'd normally be able to exclude as a employer adoption benefits you'd have to include in your income. In most cases, you're not going to get credit for child independent care expenses. You cannot exclude interest income from U.S. savings bonds that you use for educational purposes. Cannot claim credit for elderly or disabled if you're elderly or disabled, and you cannot deduct a loss from passive activities. Right? These are substantial things that are pretty much going to wipe out 99% of any reasons that you're going to want to file separately. That being said, why would we file separately? If you're separated, you may want to file separately. If you do not trust what your spouse puts on the tax return to be accurate, and you don't want to be liable for that, you can file separately. In some rare cases, you might get a lower tax burden, right? You might have a lower tax bill, and you might owe less taxes, which would result in a bigger refund if you file separately. Why would this occur? Well, if you file separately, you might have a lower adjusted gross income. So if you have a lower adjusted gross income, you're going to have certain things that might be limited all of a sudden will become allowable for your deductions. The biggest reason would be very large medical expenses. So these normally are going to have depending on the tax year, it's going to have normally a 10% or a 7.5% limitation of whatever your adjusted gross income is. Right? So if I make $50,000 and my wife makes $50,000, but I have a ton personally of medical expenses this year, right? Well, together our AGI is $100,000. That's going to mean we're going to need $7,500 or $10,000, depending on the year, of medical expenses before we can even deduct $1. So if we're filing separate, we can knock that down to $3,500, or like half of whatever that number is, right? So at which point I would be making $50,000, and that would be my AGI on my tax return, which would also lower the limitation down to either $5,000 if it's 10%. You get the point. So again, it's really not going to work out for too many people. Again, because of all those limitations we listed prior to this. If you have any of those other circumstances, those are pretty much going to avoid out 99% of the benefits you're going to get from one of these medical expense deductions or something. Last, qualifying widow or widower with a dependent child. So, it's really unfortunate. Right, it's really bad if you're married, you have some kids, and your spouse passes away. That's just awful. So the government takes a look at that and says, well, this is a really unfortunate circumstance. They're probably going to have a lot of bills and expenses. What can we do to help them out on the tax return? Well, we'll give them a qualifying widow or widower status. This can be used in the year the spouse dies and up to 2 years following the spouse's death. Right? And why would you do this? Because the benefits are higher if you're going to use your standard deduction. Now, if your itemized deductions are going to be higher, you're going to use that, obviously. But since the new tax law that Trump passed, we're gonna have really, really high standard deductions, which may void out any reason you're gonna wanna or need to use your itemized deductions. So in many cases, if your spouse passes and you have children, this is going to be the selection for you. All right, and you do get 2 additional years of that. And that's a quick little video on what status we are going to file on our tax return. Thank you for watching, and I hope you've learned something. Thanks for watching the video. I hope you learned something. Please click the subscribe buttons below. And in addition, there are links taking you to the tax software that we use for most of these tutorials. When you click on the link and you use this tax software, we get credit. When we get credit, we can keep providing you with these free tutorials. So again, if you found these videos helpful, please click on the links, help support us. And in addition, if you were to join myfreecpa.com, you could get these videos without any commercial interruptions, which would help everything move along faster. And you can actually save the videos so that they're there for you year to year as your situations either remain the same or change. And it's just a one solid place for you to find exactly what you need to help you prepare your tax returns every year. So once again, thank you and have a great day. Thank you once again for watching this video. Don't forget to subscribe. Don't forget to click notifications. On My Free CPA on YouTube, you're going to have a link to myfreecpa.com. On here, I would encourage you to sign up, get yourself an account, because you're going to be able to save all the courses I put that are relevant to you. And you're going to be able to go back and reference them year after year after year. In addition, there's going to be a do your own taxes link. This is going to be free online tax software if your income is below a certain threshold. It's basically just like TurboTax or H&R Block online taxes, but cheaper, right? This is the professional software I use, put online for individuals. I'm going to be using this software in most of my videos to explain to you how to do your own taxes. So if you want to sign up for this, please use that link. And when you use that link, I get credit, right? If you're going to do a tax return that's going to cost you some money to prepare using the tax software, because again, not all tax software is free depending on your income levels and your other circumstances, I am going to get some credit and get paid for this so I can keep putting up this videos for you. Thanks once again, and have a great day.